when I saw it, and I follow the trends, and I really like Redfin puts out a weekly report on housing, and I read that. That thing's great. And what it said, the latest one was January actually set the record for that most demand in the history of the real estate market for January. So when I saw that, that was like, you know what, this is right now, this is telling me this is the year it's going to be a real big pump. They're going to push. 2022 is going to be big for real estate. I think we'll see 2023 maybe be the slowdown year where it slows down a little bit. If rates creep up, say over 5.5%, I think that'd be enough for a lot of people to hit the brakes in the market and slow things down.
This is going to be a great year for flippers.
Oh, big time.
Because you buy something in January, you finish it in April, you know.
You just gain appreciation.
And honestly, it's kind of like a cheat code. It's something that can spoil us or spoil you. But, you know, as long as you're aware that it's probably not going to last forever, but it's fine. Just be aware that, you know, take advantage of it, right? Take advantage of it. Everyone's got the opportunity right now.
Do what's hot. And right now, the fixing flipping makes a ton of sense. In this market, you're not going to get hurt right now. And it's just simply taking advantage of the market. Really, as an investor, you're out there, you want to figure highest and best use of this property, right? What is the highest and best use for this? What can I do? All right, so right now, I'll just fix and flip it because I know if I hold it for a few months, it's going to go up in value just because I'm holding it, let alone the repairs I'm doing on it with the forced appreciation. So you're just gaining so much. As the market shifts, we'll look at it and change. All right, you know, the market's starting to cool down a little bit. I'm not going to go as high scale necessarily on my rehab. I'm going to try to just, you know, do it to bare bones and make a nice little chunk of change. And now I got to reduce my profits a little bit, especially if materials are still going up, right? You just got to take all these factors. That's all you can do as a business owner. Is it just apply?
The two things I mean, look at when we decide, are we going to wholesale it, flip it, is it's really just what's the highest and best use? Or three things: the highest and best use, what's the ROI of each section, that like what does it meet, and what's my current cash position. If you're involved in a lot of flips and you have a lot of cash out, you can do deals with no money and partners and stuff, but typically not my favorite thing. I always like to have in the bank just in case, you know. But so those are the main things, right? I would encourage you, you know, you listening or whatever, just to come up with your own criteria for what you want. You know, do you want a 3-bed 2-bath that makes $500 net a month if you rent it? Do you want a flip? Do you want to make at least 30 grand on a flip, or 20 or 50, whatever, or 100? You know, everyone has different criteria, but if you come up with that, now when you come into the market, you're a lot more sharp and you can navigate through this thing a lot faster.
Yeah, basically you're just coming up with a plan. And what you're saying is you need to have a plan for different exit strategies, whether it's to buy, like if you know, if you paid this much for this property, you could do it as an Airbnb or vacation rental and earn this much per month, right? In this particular area with the 3-bedroom, 2-bath, 1,500 square foot condo, say. And also knowing what condos allow you to rent it short term, right? Because you have ones that don't allow you to do it under 31 days or 6 months or whatever they are, right? I'm sure you're just as restricted on the East Coast as we are here on the West Coast with that, with different condos. So that's a factor. That is a factor. So I was looking at one, you'll love this story. This was a bank-owned property in Lely Resort in Southern Naples. Great place because you can do short-term rentals. You could do them as short as 7 days. So I loved it. So I was all over. It was 140,000 was the ask price. I bid 155. Would you believe somebody came in and bid 210? And this was gutted. It needed everything. They bid 210 cash, knowing that you're going to put in 75. So you're upside down. But here's what the point is. They knew they could still cash flow it. They didn't care. They had the cash. And they just wanted to earn a return off of that cash, I think is more or less what they're doing. So we're running into that kind of competition, which from an investment standpoint, like our mind says, that doesn't make sense. I can't do that. If I can't cash flow it with this much money into it, if I'm upside down, if I have no equity, I'm not going to even bother with the property unless it's cash flowing like crazy, right?
Yeah, honestly, what this market has forced people to do is just get smarter and more efficient, more resourceful, because if these hedge funds, they're not dumb, right? With Blackstone and Starwood and Invitation Homes, if they're buying, 1,000 homes a month to cash flow at a 4 cap or a 5 cap, there's a bigger play there, right? Like they're not dumb. People have billions of dollars not for any reason. Nobody goes into business saying, "Hey, I'm gonna lose a bunch of money with all your money. Let's go."
Right.
No, there's a lot of thought in there. So what the upper hand they have on someone like me or the mom and pops is they have way cheaper cost per capital.
They do.
They don't got to pay hard money fees, right? Their money costs them maybe 2%. and then they make 5 and, you know, some operational costs in the middle.
Right.
So all I'm saying is that what this market forces you to do is get a little bit better, a little bit more educated, try to find cheaper money, try to find cheaper deals, try to source more deals, try to get better costs in your construction, like all these types of things. If you like map all this out and, you know, put them on a spreadsheet or on a board or something, and just go one by one at some of these factors and just do your best at getting better and better at this, then you can compete in this marketplace. But not only can you compete, you can profit a ton more, because you've just reduced a lot of costs, you've increased things, you've increased margins. So, you know, this is kind of like some of the things you learn along the way, but this market has forced people who want to make the same amount of income or more to do this. Because if you're stuck in 2018 mindset, you're dead in the water.
Oh, you're done. Yeah, you're done. Your history. It's a totally different field we're in right now. It is unbelievable, especially with the cost of materials and the time it takes to get a window. I remember I used to be able to special order a window and it would be in a week. Now it's 3 weeks to 3 months, depending on the type of window that you're waiting on. So when we're doing rehabs, if the window that's in stock is too, let's say doesn't fit this one, we'll actually shrink the window down, smaller window, and then redo stuff on the outside, you know, where you can cap it with in-stock stuff to make it still work, right? That's what you got to do. You got to adjust on the fly. So because speed, right? Because we're paying money for the lender on this, right? So the longer this drags out, the more our profit drops, unless we're in a hugely accelerating market. But the different markets that I'm in, it's not always the case. It's not like Florida here. You know what I mean? So you're just adjusting on the fly. Here we can get away with stuff a little bit more, but materials and labor going up. That's the drawback.
No, it's crazy, man.